Okay, traders, we are now in this trade at 5 to 8 to 4. We're looking at Google again on the 2-minute chart. Another day. Today is the 7th of September 2011. Okay, another messy trading day. Okay, so what's happening, man? What's happening, man? Ladies and gentlemen. Good morning, good afternoon to you all. For those of you who are new to us, we are the TSTW S08 traders, and our website is www.stochastic-macd.com. For all trade, we will use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's not a solicitation or an offer to buy or sell any financial instrument, and it's primarily for the TSTW S08 traders. Okay, yesterday we were showing you on live chart the Google, okay, this level here at 157,001. Repeat again, the level we are talking about is 51700. My apologies. The level we are talking about, that's where I place my cursor now at 51700. That was the key resistance level. Okay, now as I told you, somebody was accumulating, which means buying Google at 51400 yesterday, and I show you that with the price loan we will know that the price will continue the movement to the upside, and after the accumulation take place, you usually see a gap. This is what we call a runaway gap. This is the runaway gap after a valid bullish accumulation. Okay, after a valid bearish accumulation, you will see a runaway gap to the downside, but in this case we are dealing with a runaway bullish gap. Okay, this is it, this gap. The price will not come back and refill this gap here. This is what we call, okay, the runaway gap. Usually take place in the first area wave, very often in the first area wave, or best place you want to see the runaway gap is in the third area wave, best place. Okay, what's happening, man? We are now in this trade at 5 to 8 to 4. Okay, you know that our obsession with 2-4. Okay, all right, TSTW 24, lovely people. So what's happening, man? Now, what was happening yesterday, we noticed clearly. We posted a lot of video yesterday on our YouTube channel, www.youtube.com/.rio, and there were a lot of video posted about what was going on in this Google stock. And during the holiday period, the labor holiday period, we posted a video about what we titled a wave principle. We were talking about Google, and we were telling you that Google was very bullish, and after the holiday the price gaps down because the smart money want to buy at the best place. Now they know that it's to buy, the price will go down fast. Okay, so now they bought it. In fact, yesterday they were busy accumulating. Just using the price here, we knew what was going on, buying at 51400. Okay, that's true. The price did not hide it, and we told you yesterday that there's a high chance that Google gaps up today, and it gaps up beautifully here. And this is a runaway gap. It will not, as I've said to you, it will not come below this level of 52796 today. Why? Because of the price itself, the number one indicator. You see now, the price. Keep your eyes on the price, nothing else. Okay, so after a huge successful accumulation, the person who was buying here was quite aggressive. In fact, this person liked Google very much and want to buy for long term. This is not ordinary traders just buying to make a few pips here and there, and this is somebody who is buying this stock for long term, and this person means business. And as you can see, as the market did close yesterday somewhere here, they were buying big time. They returned the price last minute. This was we were here as the third area way on this 2-minute chart. Fourth area way came here, and the fifth was ended here. We were expecting a very orderly ABC correcting move, A, B, C, but this person who wants to buy was so desperate, forced the price back down near the zone of 51400. The price went to 51461. He or she reloaded big time here, this section here, and leave it up here. In fact, what was happening in the last 15 minutes before the New York is closed, the person who was buying Google was loading it. Now, what I'm saying to you here, I was not looking at any level 2 trading tool. The price itself, the number one indicator, trying to go what I'm talking about here, the language or the vocabulary that I prefer to use here is looking inside the price, keeping my eyes wide open, not blinking, okay, trying to understand what the price itself is communicating to us. So I can see clearly that somebody was desperately buying at 51400. Okay, the price did not hide it because the stable data is saying that the price does not hide anything, nothing. Whether there is a market manipulation, market distortion, exaggeration, failure, gaps. You see, there was a gap today. Did the price hide it? It didn't. It's here, huge. It didn't. The price will not hide the support level. It will not hide the resistance level. It will not hide the patterns. It will just tell you everything. If it's going up, it will tell you that I'm going up, displaying higher lows and higher high. If it's going down, it will display lower lows and lower high. If it fails to display a new lower low, it's telling you that I'm getting weak to the downside. If it's going up and it fails to display a new higher high, or if it displays a new higher high and return back below the previous high, it's a weakness. Just the price, no mumbo jumbo. Okay. Now, the reason why some of you may get fed up with me of this thing is because it's so important, and a lot of traders are losing money every day. New traders spending most of the time looking at the stochastic, looking at MACD, looking at RSI, looking at Aron indicator, looking at Williams percentage, looking at all sort of indicator. Yes, we do use indicator too, but you look at the price first and then look at the indicator. You see, when the indicator tells you something, you must confirm it by the price itself. If the price does not confirm the message that the indicator is communicating to you, it's just nothing. A lot of the time, trader will see one of the things that get traders in trouble is the divergence. So people see a bearish divergence, they say this is a bearish beautiful divergence on the hourly chart. The price will go down by all means. If you see a bearish divergence, sell. No. When you see a bearish divergence, look for opportunity to sell. Wait for the price itself to display to you a bearish information before you sell. That's why traders get into trouble. There are fake divergences and valid divergency. You understand what I'm talking about? So I'm drawing your attention to the most important thing, the price. You see here, it gaps up. Okay, what it did, it come back to this level and then turn around. When the price turns direction, anywhere that the price changes direction, it becomes important price level. You draw a line there. Chances that 80% of the time the price will come back and try to retest that level. And look, you can expect it. So it starts going like this. Don't say that you miss it. Just relax and wait. Draw your line and watch it. You see here, we were here. It came and hit it. Do you buy straight away because it hit it? No. Waiting for it to turn around. It turn around, you will buy here. That's it. You see? So instead of you going ahead of the price, thinking that you are smarter than the price, you just flow with it. No resistance, just flow with it. Now it's approaching this resistance level. What some trader will do, think of it. What will some people do here? They will take some profit because the market just opened and they see some money in the account. They want to bank it because losing trades do happen. Losing trades do happen. So people, day traders, are taking some profit. Okay? They will take some profit there. You see now the price responded, it will come down a bit. If there are more buyers, more traders willing to join this bullish party, as soon as they see it coming down a bit, they will be busy, so desperate looking to get in or try to find out where is the best place to enter a trade, considering their risk-reward ratio and also the risk that they are willing to take according to the money management rule, 5% money management rule. If you have purchased the TSTW24 or the TSTWSY08 trading system, or any of our trading tool, chances that there is a high chance that you will one day, okay, become one of the best traders. Now you can write it on the wall, and I will not say to you why, but I'm saying to you, if you have purchased any of our trading system, if you remain in the market, it's the most important thing, to remain in the game, that they don't take you out. Okay, because a lot of traders every year, they are taken out of the market. They can't come back. Money finished, everything finished, kaput. You don't want to do that. 5% of your money management, you are in the market. You are in the market. Okay, the most important thing, to remain in the market. Okay, so you are in the market. Okay, so you are in the market. You keep your eyes wide open. You try to understand the thing. You are using any indicator, try to understand the role of that indicator. People use the momentum indicator, but what I have noticed that a lot of traders don't understand the role of a momentum indicator. Now, if you are a carpenter using a tool, you must know your tools. If you are a surgeon, you will know your tools. If you are a accountant or attorney, you know your tools. If you are a trader, you should know also your tools. You should know how to use the stochastic. You should know how to use the MACD. You should know how to use the moving average. Talking about moving average, they are very simple. People say to me, "Oh, George, the moving averages, okay, I know how to use moving averages." But I tell you one thing, one of the tools that traders are not able to use are the moving average. In fact, I will say 99% of traders do not know how to use moving averages. We have posted a video about the exponential moving at 50, how to use the exponential moving at 50 on the hourly chart. It's on our channel for free. And it creates a lot of money. You see now, people are taking profit, yes or no. They are respecting this resistance level on this live chart. You see? They are taking it. So it just said the same thing. So now that it's coming back down, we want to see whether other traders would like to buy, or the smart money would prefer to buy again in this zone. Okay, so you just watch it. Okay, you see, so it's coming down now. We're watching it and see the reaction. This is an invitation. These two candles here are invitation to buy. Are we having more buying? If we do not, and it's coming down more, the price will come down more. If we didn't have any buyers here, okay, market makers will bring the price down more. It's like auction. If we come here and no one is buying, you bring it down more. If we come to this level, no one is buying, you bring it down more. If now you see now people responding, it's getting blue, it's turning up, it's going up. The market makers start bringing it up. Say, okay, here do we have more buyers? People put their hands up and buy. Okay, you bring it up and say now 350, which who want to buy? And more buy. Auction, remember auction, again up. Two things you must remember in this market, talking about my favorite dancing, the Irish dance. Okay, Irish dance. Okay, beautiful. Same movement, up, forward, beautiful. Go to www.248yourway.com and watch the Elliott music. I posted some excellent Irish dancing there, and you can rejoice and enjoy yourself when you are learning to trade. Okay, so it's not just for fun. I put the Irish dances there because traders are moving in waves. You see, we down, we up, we down, we up, we down, we up. You see, it's like Irish dancing in harmony. Do not cut corners, because all this is going on here. It looks a bit messy, but it's orderly done. You see, now we are having a kind of higher low here. If this candle is completed, what I will do, following the price itself without cutting corners, protecting my trading capital at all costs, because it's my first priority. I want to take money instead of giving money away. So that's my priority. I want to take money. Okay, so I will draw this trend line here. If this is If now it's closed, now I can do that. Okay, so I'm watching it now. Okay, so I have a kind of higher low here, but still, you see, we are again at the resistance. Those who bought it right now just take their profit fast because of the resistance, and because of that, the price coming down more. We want to see whether other traders will be happy again to take it up to break this resistance level. So what is happening here, in fact, ladies and gentlemen, we have a beautiful triangle in this section here. Can you see that? The price did not hide it, that we have a triangle. Triangles are continuation tools. People place orders, I know, going to the mind of other desperate bull traders. They place order above this level, waiting for a breakout to run it away. You see? So in normal condition, we should see some action as I'm bullish. I don't have any, you see, it's coming above it nicely here as I'm doing this video in front of you. Now it's breaking above it, okay, nicely. We'll see whether it will run fast. If you run fast, it means that there are orders being placed here. So watch it, ladies and gentlemen, just watch it. The price, okay, the ball, that's the ball, okay. If you watch a rugby game in London, if you come to London, you go to a place called Twickenham. Okay, Twickenham is a rugby match place. Okay, weekend rugby game. Okay, trading is like rugby game. It's like American game. Okay, you can tackle your opponents. Okay, head on, catch them. Okay, roll them down. Okay, take the ball from them by force. This is trading, and it's not for children. And rugby is not for little weak people. You have to they drill it. You know, when you have you seen a rugby training? Yeah, they use it. They hit themselves to tough stuff because your opponent, they are heavyweight people. So you don't just come into the market and just say, crying like a baby and saying that, oh, I lost my money. Oh, my mother give more money. I'm going to do this. No. Be fully responsible for it and take full responsibility. In fact, I mean, if you are in the market, it means that you are also a tough guy. I need to say that to you. So I'm not trying to put traders down here. What I'm trying to do, I'm trying to wake people up a bit, you know, so people understand what they are getting themselves into. Okay, you see, trader, they interview one trader one day. They asked him, have you ever lost a very important money? It's one video that I saw on YouTube. The guy said that he lost one particular day $200,000. Now, and the next question was, what have you done after that? He said, the next day I get back into the market and trade and get my money back. Think of it. Somebody who lost $200,000 dollar in one day, and the next day this person did not stay home or go for some counseling, but return back to the market the next day to trade again. You need to be mentally tough to do that. It's not a joke. Trading, in fact, is one of the myself, I never see anything like this. It's just so ruthless, it's so tough, so difficult. But at the end of the day, what I have realized to keep myself in line is never ever to disobey this thing you see on this screen here, the price. That's what I try to do. I don't try to go behind it. What I'm going to do now, because as I'm doing this, I want to change time frame. I'll go to 5 minute chart. You see, now we are here. I want to go to 5 minute chart so we can see the bigger picture of what's happening here. Okay, this is on the 5 minute chart. Okay, that's where we are, and my horizontal line is still here, and the price went up first, and some people are selling now. So we enter this trade, as I told you, at 52824. Okay, the price now at 53021. We are in profit. Why we didn't take profit? It even went up to 53088. Okay, now more than the 200 pips. So why? Okay, we were still stubborn not to take our 200 pips and run away and just go. Why are we still greedy to stay around, risking, okay, our initial, okay, capital? That's the question. Okay, you see. So this is it. It's a mentally tough game, believe me, mentally tough game with the market manipulation and the new trading methods coming to the market. The market is not like before. It's not like the way it was before. And there are some teachings that still in the old fashion, where they say to trade and buy at this resistance, just place order there to sell. And you see all the time there are traders making money out of other traders, which means they take their stop loss out. It's constantly happening. People going into the mind of other traders, paying attention to the stochastic overboard. They know that majority of traders will be busy selling. What other traders will do, the contrarian traders will in fact buy. They just buy. And the next thing, price boom, 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 boom up. Or they see the stochastic oversold. They know that majority of traders want to buy. They will sell. And RSI overbought, some people will buy that. And also to two high frequency traders, market makers, market specialists, okay, liquidity traders, momentum traders, all sorts of traders, government interveners, dodgy traders, rogue traders, all sorts of things going on in this messy market. But the only thing that will not fool you is this one, the price. Is the price. It will not fool you. You see, it will not fool you. Will not lie to you. It will not get you into trouble. This one, the red and the blue one here, will not fool you. Okay, so I hope you enjoyed this video also regarding the price itself, the number one indicator that you will put into practice in order to cream the market consistently. We are the TSTW SYS 08 traders. Thank you for watching, and we will speak to you very soon.